Hello active traders, Ken Calhoun here from TradeMastery.com with the channel dedicated to helping you make bigger winning trades more often a way of life. In this episode we're going to take a look at how to finally get rid of large stop losses and really the value in a tool and a technique designed to help you keep smaller stops a way of life. It's a really good visual management strategy that you'll be learning about and a technique that I like to use personally myself to keep me on the side of when I'm wrong, keep it real small, and how to do better in your trade. So let's take a look at that coming right up. To introduce the idea, just remember that you can take large stop losses, small stop losses, large wins, small wins. It's up to you, and it's you're in charge of what kind of trading approach you're going to take, whether it goes from big stops or small stops. I'd rather take a lot of small stops in pursuit of an occasional win than a large stop loss and trying to throw a Hail Mary pass. That's why I'm so completely against what you may have seen some people out there advocating, which is trading thousands of shares of cheap stocks in pursuit of big wins, because often you'll get a large share size on the front end, and if you're 5,000 shares and it goes even a dime against you, that's $500 you're down right out of the gate. So, and it gets worse from there. So instead, I like using smaller position size and scaling in gradually over time, whether I'm day or swing trading. So anyways, let's take a look at that strategy and a tool and a technique designed to help get rid of large stops and focus on transitioning towards a more break-even, small stop when you're wrong approach. So let's see how it works. This is a particularly valuable set of two slides I wanted to share with you before we look at our S&P and our charts for this week. And that's from a financial trade mastery standpoint. I want you to look at getting away from large stop losses. At its simplest form, I like to be very binary. The punchline is you got large stop losses, you got small stop losses. You got large wins, you got small wins, and shades of gray in between. The one of those four to get rid of is large stops, and your goal as a trader should be to shape or migrate your trading strategy from where you've got kind of a mix of stop losses all over the map. Having traded many millions of dollars worth of stocks, ETFs, and other instruments over the years, I can tell you from real world experience, this is what it takes to make it. What you want to do is get to a place where you shift to where you're doing a lot of small break-even, small up, small down trades in pursuit of getting a bigger rack of, say, moderate wins over here. Occasionally you get decent wins. Again, your numbers may be larger. Maybe you got zeros after this. Maybe you trade larger size. I like to keep things tight. I like to be a small conservative size trader because I like to not lose much when I lose, right? That's the key to success as a trader, is keep your stops as small as possible. So my point is, a tool of the week that I encourage each of you to develop. And you can do this old school too. Just get a legal pad of paper and use a pen and mark out a horizontal line and kind of sketch out the size of your most recent, say, 20 or 30 wins, your most recent 30 or 40 or 100 stop losses, or whatever your numbers look like. If you really suck as a trader, you may not have much of anything here in the winning trades area. And that's all right. It's like learning how to play guitar, speaking from experience, which I took up for the first time maybe 5 or 6 years ago. You play a lot of wrong notes the first couple of years. That's normal and expected. As a professional trader, though, your goal is to take money out of the market more consistently. So what you want to do is start insisting on not taking large stop losses. Say if it gets over $200-300, I'm out, right? And make sure that you've got your number in mind, a clearly defined ahead of time maximum stop loss based on the number, the dollar figure, not the chart pattern. You may have seen one of my popular YouTube videos called your P&L indicator. And what I mean by that is it's not the horizontal support or resistance that manages your exit as a trade. If I'm in a trade and it goes against me a few $100s, I'm going to get out, and the charts be, to heck with it. Charts be damned. It's to heck with the charts. I care about my money. Or if I'm up in a trade, say $600-700, and it drops back down to $500, unrealized P&L, I'm going to go to cash and take my profit because I want to sweep profits out of the market. So that's our tip of the week, and I hope that that helps you develop make a blank profile like this, where you've got the size of your stops, size of your wins mapped out, and then fill in the X's and make sure that you're trying to focus on charts that actually work out, and you're not taking a lot of large expensive stops. Just think about it. Do the math. One $300 stop or six $50 stops. Much smarter to take shots at 6 instruments for the price of one and manage your numbers that way, right? So trade wide, not deep. Try and shift that, and the only way you can get there is to map it out visually. If you're like me, you're a visual trader, so you like to see what's going on. And that'll wrap us up for another episode. I hope that this has been of service to you. I'm Ken Calhoun from TradeMastery.com. Be sure to subscribe to the channel if you're not already subscribed, and feel free to put a comment in the area below. If you want to get an answer from me, feel free to ask a question. If you're a swing trader, be sure to join SwingScans.com. That's my popular best-selling service, www.swingscans.com, for 10 top picks and a live webinar and a chance to ask me questions personally online every Saturday. And if you're a day trader, be sure to try out www.tradingtheopen.com. And we meet 3 days a week, the best high volatility Tuesday, Wednesday, Thursday opens. And you can bring questions and get live picks and alerts and learn more about active trading. So until next time, trade with passion, or at least with intelligence. Trade with really tight stops like I just taught you how to do, and let's go get them. Best wishes for success in your active trades. Goodbye for now.